Hello, how are you? Hi, so good to see you here. Today is about RF compliance. So I kind of want to run through things that you really need to know. If you received IRS fund, RF fund, it is really important to know it from get-go so you will never miss a bit. If you do miss it and do it wrong, and the consequences is that you return the fund. So I want to just make sure that you know. And if you got RF already, trust me, you are the lucky one. You really is the chosen one. You are the lucky one. And later I tell you how much of a shortage that funding is. There's a lot of restaurants and did not come in fast enough and they missed the chance. Okay. All right, so important. I have to do this no responsibility disclaimer because if you take knowledge, just a piece of knowledge, apply, that had a bad consequences, and please don't blame on the internet search you got. You really do have to, obtain professional advice and know things in general. Be smart and ask questions. But when you really get down to do it, you want professional to help you. Okay. All right, so let's go about RRF. So I just want to kind of refresh everybody's memory. Remember, this IRF came from the American Rescue Plan Act, right? And so this RF is to give funding to help restaurants and other eligible businesses to keep the door open. That's really the purpose of RF. So this program provides only to restaurants, for those public facing restaurants and to give them money to compensate the part of revenue that they lost during the pandemic. So the limit is 10 million per business, no more than 5 million per physical location. So it's quite a big amount. In fact, with all the RF we didn't have any client who applied for 10 million and even 5 million. So our clients are under 5 million. So that tells you that very few restaurant, we have 12,000 clients. So, we definitely not the small portion of it, but to get into 10 million, 5 million per physical location, boy, that's a lot of money. And the people who receive the funds are not required to repay it. So it is yours, okay? And as long as you spend that money on the eligible uses, means the government agreed you can use on these things no later, listen to this, no later than March 11, 2023. So we have like what, about 2 years, right? From now, and you go for 2022, 2023, March 11. That means this money need to be spent within this period. Now, and if you're still not getting RF, I'm not here to tell you that too bad, so sad, you're not going to get it. I can't say that, but I want to give you some numbers. So to get you to be prepared mentally that you're just not going to get it. Okay, so the IRF, when it opens, it already said first come, first serve. So if you didn't come in timely and you don't get it, and that is a general consensus, and there's no appeals, there's no debating. So what decision is made right now on that portal, it is final. So that is what the spirit of RF. And the SBA give 28.6 billion. They put 28.6 billion in the mason jar. They said that, okay, restaurateurs, you apply, we give you this money. But there are so much application. There are 266,000 application, total of 65 billion. And they only have 28.6. So if there is no Congress approval for additional funding, people who didn't get money probably won't get it. All right. And then the other number I want you to remember, you remember when the program opened up, there was first 21 days for business with a special status, like the veterans owned by women and the socially, economically disadvantaged individuals. Remember, that was the quote unquote. And those application alone already over 28.6 billion. They were 29 billion in total and 147,000 applications in the first 21 days. All right. So I know I'm not giving people hope for RRF if you haven't received it yet, but there are part of the IRF still open. So I want you to know. So remember in the very beginning when the Rescue Act came out, there was a $5 billion put aside. They're part of the 28.6, but 5 billion they put aside for small restaurants and businesses. So in this process, SBA did what they did is that right now they're still open for restaurants. Their 2019 gross receipts is less than 50,000. So small restaurants are still eligible to apply. Okay, they're still open. So what does that mean? That means your 2019 is 50,000. If your 2020 is $1, then you can apply for $49,999. Okay, so it is sort of limited on it's a small amount, but compared to 10 million or 5 million. So know that if you have, say if you have a taco truck and you make less than 50,000, that's not surprising, right? And because you probably only operated for certain months, and winters you just don't make a lot of sale, and then you are eligible. So please, if you are not applying RF yet, but you know that your 2019 sales was less than 50,000, that is still open. And then there's also money put aside for revenue that's in 2019 is less than 500,000 to 1.5 million. So this chunk of restaurants, they are still open. There's a 4 million set aside for that. That portion is still open. So apply, they're not closed yet, but the majority of it is used up. So only this specialty one is still here. So, and we want to know that what happens after you applied. Once, a lot of you already, some of you, I know that you already got your RIF. So the biggest hurdle the applicants has to jump over is that verification with IRS. So if someone has not filed 2019 tax return, and just because of IRF, you are rushing to file it right now, that is difficult because you need to be, the IRS system need to receive your tax return, process it already. So when they do the verifications, can match to it. Otherwise, it will come back as an error. So SBA would treat that you did not file 2019, so your number is not reliable. Okay. No, so now I want you to know that this is the biggest piece. Other than that, once you got your documents in and it's accepted, it's just, you're just waiting for IRS. That will be the immediate step that, you need to wait for. I was told it's about 7 days a window for that. All right, so let's really dive in. What are the expenses is allowable? Okay, and you want to make sure that you start a accounting record, really recording what IRF money you used for, please. You cannot get IRF money and RF money and just think that, oh, it's just my money, I'm going to spend it. Without a good accounting, what you're going to end up is you're going to return the money. And it is not very easy to return money once you get it. Am I right? I'm so right. And there is, there is a Chinese saying, describes the difficulties when people get money is easy, but when they return money is like pulling teeth. So same, and thinking of pulling your teeth out to give it back, that is just not good. It's better to just hire an accountant rather than a dentist, right? And I think that's a good deal to hire an accountant. All right, so eligible use of funds. So those are list of expenses. Let's go through them because I want to, if you happen to listen to the webinar, not reading the PowerPoint, then at least you hear me talking about it. The number one is business payroll cost. So means that the payroll money you pay to your employee, right? But if you do that, folks, you need to make sure that is not paid by your PPP dollars. That is not going to be eligible for employee retention credit, ERC credit. You don't want to take advantage of any other federal program related to your payroll, and this payroll is part of eligible expenses for RRF. Payment on any business mortgage obligations. Literally, mortgage applications means principal and interest. And don't get smart. You cannot say that, oh, let's pay off the loan then. I have a good idea. No, you can only pay off the loan portion that belongs to February 15 or May 11, I forgot. It's a February 11, 2021 to March 11, 2023. So it's only this period, folks. It's only for this period. So you cannot pay more to the future. You also cannot take the prior, and because you didn't pay, that obligation is only for this period of time. Of course, interest, right? And if you were so late and they assess your penalties and stuff, as long as the penalty is assessed in this period, you can pay that with RF money. Business rent payment, of course. And this does not include prepaid rent. So don't think of, oh, good idea. I'm going to pay my 10 years rent with RF money so I can have this place all for free for the next 10 years. No, it is only available for this 2 years time where your rent is due. All right. Business debt service, both principal and interest. This does not include any prepayment of principal and interest. See that? So debt service is the same as a mortgage. So maybe you have mortgage, but you also have, say, operating loan, right, to support your inventory purchase and stuff like that. And those kind of debt, you can pay principal, you can pay interest, but you cannot prepay them. You cannot go pay it off, use RF money. That doesn't work. Of course, business utility payments, business maintenance expense. You see, I did not say business relocation expense. Maintenance means maintaining existing condition payment. So let's say if you have a restaurant and the plumbing didn't work, your dishwasher got stuck and is not washing properly. So you hire a plumber coming in to fix it. That is eligible expense. But if you say, well, let's just dig up the ground and redo the pipeline for the whole building because we have this money, we need to do that, we can do this anyway, and that actually increase the value of the property, it would not belongs to RF. Okay, but you can use EIDL loan to do that. So you can use your other business debt to do that, or you can use the money you made to do that, but not RF. Construction of outdoor seating. What does that mean? If you have a restaurant, you have these patios you haven't really been using, but with pandemic, people just want to sit outside. So you start building it out, put awning and, fireplace and everything outside, outdoor. That is eligible. That you can use RF money. But of course, you have to finish it within this 2 years time, right? Business supplies, including protective equipment and cleaning materials. Supplies, business supplies, your face mask, your personal protective, supplies, and, cleaning material. That makes sense, right? And the business food beverage expense, including raw materials, this is literally your cost of goods sold, right? So you can use that for your cost of goods sold. And the covered supplier cost, and I actually it is written this way, so I think it's the same as the supplier cost. I will look into that. If it is different, next Saturday when I talk about other pandemic grants and government awards, I will make sure I solve that mystery. you know, English is not my first language, right? Sometimes when I see things like that, it doesn't even it look really foreign to me, and it's like I know what means covered, and but what does that mean? And some of the word put together literally mean nothing to me. So I hope you feel the same way as I do. And if you feel that way, it is another reason to come to my webinar, because I don't talk meaningless stuff. It just what I say, it is very easy to understand because that's how I understand things. That's why I need that disclaimer, because if I say something wrong and you're not going to put me in jail just because I said that. I want to stay outside of the jail so I can serve most of the people in our community. And for all these good work I did, I deserve to stay outside, right? Um, Business operating expenses, of course, that would include all of these things: your accounting fees and your lawyer fees, and your who knows, your insurance, all of these things. So it is literally everything. Isn't that true? And I am thinking, as a restaurant owner, what else doesn't include in here? I know that if any part of this expenses is covered already by other federal grants and you don't want to use it, right? But the payroll side has a little bit of complication, just because you may have PPP dollars, you may have ERC credit. Just be sure that you don't double dip, triple dip on that, right? And other than that, really, you're good. So this is allowable use of funds. And then next step, we want to kind of go through a couple of key points is really useful. So retaining all records submitted with the application, okay, including copy of completed application. So don't think that you got the funds, you're done. No, you're not. You're not done. And you need to keep it, for how many years? 6 years. So make sure you keep it, keep it, keep it, keep it, keep it, keep it. 6 years. Okay. I said it 6 times. Um, the copy for the completed application, sometimes you don't really think about that. You need to print that out of your portal. And I don't want you to rely on the portal, because that can go away. You need to have all your support together and save it. So that's number one. Okay. Number two, retain all records supporting the application that were not submitted. Sure, you submitted a lot of things, but there's also things you didn't submit, but it's still part of your record. So information, so I listed all of these. So for those who are listening to me and not watching our slides, is information supporting the date the business began making sales. Do you have proofs for that? Particularly important if business opened in 2019 or later. So you got to have proof. Maybe your proof, I'm imagining that maybe your proof is a formation record. Then you need to have that record from your lawyer or from your CPA firm to keep that with you. Maybe your proof is your sales report with the state. Then keep that. And maybe your proof is workers' comp that you applied. So whatever third-party document that proves you just started that on that day. And that's a really important proof, because that's eligibility, right? You didn't submit that. They are just asking you on the form. So now you need to keep that. How the grant amount was calculated is also important. There's 3 tables like you use to calculate that. And I'm pretty sure you calculated before you got on the form. So in our firm, we actually has a whole setup. We already did it outside of the system. Then when we go into the system, it's just a matter of clicking and doing things and mechanically, but all the preparations is already done outside of the portal. So we have all of that backup. If our client's the one applying for RF, we have all the backup, because if RF application could be done by yourself, and if you don't have that, you really need to keep it. Okay, even if it is ugly handwritten notes, you were doing calculation, you want to save it, because you may be calculated that wrong. And if you honestly made a math error, that's okay. And you can be forgiven. You can pay the money back. But if you are just fraudulently making up the numbers, that's a different nature of offense, right? So with that, you want to prove that you have go through due diligence and had the calculation done correctly. Mistake is mistake, but the intention is that it is done properly. So that is important. Information demonstrating a assertion of priority for awarding the grants. So what that means is you say, I am a women-owned company. You check mark on that on the portal. But how do people know? How do you prove that is really you? So maybe you need to have that partnership agreement come out. Look at whether you are 51% as a woman. Maybe you are not. You say you are women owned because your partner owns 90%, you own 10%, just because your partner is not active and he just really don't do work and you're the one did all the work. So you call it woman owned? No. So those are not going to help you. So you need to fix that. You need to fix it and get the documentation, legal documentation correct. Okay. The SBA can request documents on your application or self-certification and plans to conduct a random audit for some grant recipients. That's the SBA's plan. And if you get audited, that's normal. If you didn't get audited, you won lottery. Okay, so I tell my clients that everything we do, our mindset is we need to be able to go through audit without issue. So everything need to be above the board, clear and clear. There's no other way to do it, right? And I always tell our folks the restaurant business notoriously is kind of a self-managed business. Government is never really in it, right? Your sales tax people walking in audit you, that's pretty much about it. I mean, most of the restaurant businesses just running on their own, filing taxes, and you don't touch government and you never got audited. Not like those nonprofit, they have to be audited and they have to request being audited because they're using government money. Now you're in that shoe. Now you have government money. And what do you expect? You have government money, so you should be expected to be compliance reviewed, right? And a record related to an eligible expense. So see, and you can say that, oh, this is all the expenses related to the outside deck that I put together. And, the invoice says that drywall, and the invoice says something else that has nothing to do with the outside deck. Not a good idea. Okay, so you want to make sure that you have a record to prove these are eligible expenses. Information regarding determining of affiliates and the affiliated company. This is important because some of the companies, they have a different physical locations, but they're one big company. So the funding, remember there's a $5 million per location funding. So in most of our clients don't have that issue. Even if they have a multiple companies, they're all separate. In number, separate operator, even though it's owned by the same person, but it is not really transact with each other. So it's a separate business. Information supporting ownership share for owners listed on the application as of the date of the application. See, there you go. So whatever you put on that form, you need to have a third-party approval or legal documentation to sustain it. And your eligible expenses, of course, is so related to accounting. This is why we, Community CPA, are in the hurry to tell you that you need to do it right, because if you don't, when they come back for these kind of documents, what are you going to do? Scramble at the time? And that's just not worth it. Okay. And by that time, and the economy came back, people are busy with real business. There, you're dealing with pandemic leftovers. Not fun, right? Not fun. All right. Protect your small business, protect your SBA account information is another thing. Now you got your RF fund. And if you didn't get it, you need to check on that portal all the time. Make sure that you answer all the questions. Hopefully, you're still lucky to get the funding. But if you got the funding, I know you probably forgot about your portal already. Please don't. And write it down, because you need that portal, and you better go back in and print everything out. Okay. And if you are not going to use the portal anymore, you're just gonna forget about it, then you need everything to come out of there. Because when you get audited, they have that information. They're gonna say, well, you choose this and you said you're veterans, show me your record. You don't have one. You say, well, I didn't choose that one. They can show you that you did, so you better have your own record, right? All right. Plan how all RF grants funds will be spent on eligible expenses. This is really important. And you got the money, okay? And you want to make sure that you account on how every dollar is spent. Really important. And I know we count on what we spend for income tax purposes, right? You still have to, you have income, you reduce your expense and all that. And RRF money, and whether that is going to be taxable or non-taxable, I did not see anything really authoritative yet. So if you ask my opinion, because IRF is paying for the shortage of sales, I would think that is taxable, but I'm not SBA. I'm just a accountant, and I'm a really good one, but that was just my common sense. But my husband, Dr. Hao, always tell me that I don't have common sense. So, under that kind of influence, you kind of start to believe that you don't have any. So I don't have any common sense. There you go. And make sure that you don't treat that money like your stimulus check, deposit in your personal account, spend it whatever you want, and forget about how to account them. But the RRF is a serious matter. You want to make sure that you really use it based on the limited, based on the eligible expense list, right? And then our next, oh, that's February the 15th. I was saying February 11th. So the expenses from February the 15th to March 11th. What the heck? Why it is so weird? Why can't they just do it January the 1st to, but okay. And I'm grateful that they give out RF funds to many struggling small businesses. So I'm not going to pick on the date. So February the 15th, 2020 to March 11th, 2023. Way to go. It's okay. So we will make sure we spend all the money during this time frame. All right? And mark on your calendar. And if you're a business owner so busy you don't remember anything, and just put on the calendar on your iPhone and put from February the 15th all the way to March 11, 2023, and say grateful of RRF. So you know that you're spending RF money. And you can spend it fast, right? You can spend it early, so you don't have to go through the tracking anymore. But if you didn't, this is the longest period it can drag. All right. So this is the next one I have for you. So learn how RRF funds may be treated in upcoming tax filing. This is a big deal, okay? So you got IRF in 2021. So it has to be treated when you file taxes. So don't try to do that on your own this year. And even if you are so genius, you do all your tax by yourself and you just learn everything out of the webinar, YouTube, listen to Ying, you got everything, but still. And you want to be certain how they treat RF fund. And I say that's not finalized yet. And I didn't see anything. And I want things to be more clear before we make that decision. But, you want to make sure that your RF is included in your 2021 tax return. When I say included, I don't mean that you will be paying taxes on it. Depends, right? And I saw some organization, some really authoritative organization we're talking about is not taxable because it's grant. And I want to hear IRS words. I want to hear AICPA's comments. So I haven't really heard that yet. So So no opinion on that. But even if it is not taxable, it is still going to be on your tax return on your balance sheet. So that's what I mean by that. You have to have that in your 2021 tax return. And if you already applied for employee retention tax credit, if you applied for that, the first quarter, second quarter, third quarter, fourth quarter, any of this quarter in 2021, folks, you can't use that payroll to use your RF payroll. Okay, RF money for that payroll? No, you cannot. So like I said, don't double dip, triple dip on the same expense. You can only use that expense once for one purposes, whether it's PPP or ERC and nature like that, right? And because it is government grants, folks, do you know that is a public knowledge? How much you're getting, what you got is a public knowledge. And the federal grants is subject to transparency requirement. So, you know, there's no keeping your name hiding, and people know what you got. Just like PVP, in the very beginning of the PVP, remember, it's all gotten from those big companies. They took all of the PVP, and those companies, you know, their name were exposed. And you think because they don't know how to keep their secret, or you think our government already have things put in place, will expose people who gets government money. That's our tax dollars. Of course, it deserves to be transparent, right? So know that what you get is not a secret, and you know, people can find out. Citizens, other businesses, people can find out. All right. So obviously, RRF and COVID, it is new. It is new things in life. We cannot say for sure. So there are new things gonna coming out. So just follow our channel. That's really key. You follow our channel, we learn and we share. And because our business is about your finance health, so it is our competency to just understand what's going on and be able to deliver that to you in a very plain English. That's why on our YouTube, you see our channel called We Speak Your Language. That's exactly what that is, because we speak your language in the way that you could understand. I'm not talking about I speak 9 different languages. Of course, our firm collectively with our staff, we speak 9 different languages. But I just speak English and I speak Chinese. So I don't speak Spanish, but my English is so simple. And our translation of the content is so straightforward. It will help you just listen to the English, and it's not hard. And I know it is not hard because I don't speak big words. I don't even know any of the big words. I just know simple English. Sometimes when I read, you know, those SBA documents, it wasn't like easy, like reading a novel or anything, because the words I know, but the meaning is kind of skip me, like this covered suppliers cost. What does that mean? Covered. And so stuff like that. But once we do, we translate that to you in the very easy way to understand. Now, so a couple of tips I want to give you before we end today's webinar, and it is to create an RF budget. I want to show you what it looked like, and this budget will help you to manage your eligible expense, ensure that every dollar is tracked and expense category are with the date of transactions. You know, you want to get familiar with that portal. Remember, I said that if you don't want to use the portal anymore, you really needed to print everything out. But that portal is yours. So SBA is planning to really utilize that portal for you to submit report. So that portal might be with you for 2 years. Okay, so make sure that you keep your portal information. If you don't want to do any reporting on that, you can give your portal information to your CPAs, but just please don't throw them on the street so everybody can get in, okay? And just be responsible for your own cyber security side of actions, right? So there is a report for grants that for the FFR need to be reported. One is at the end of this year, the other one is at the end of next year. So make sure that you know these are due dates. December 31st, 2021 will be the first report due. And if you use RF grants for business debt service, remember that it can only be used for principal and interest. It cannot be used to pay off an entire loan or prepay the interest and the principal, right? The past due expenses are eligible if they were incurred between February the 15th, 2020 to March 11, 2023. You see? Okay, so keep that in mind. Using RF grants for payroll, be careful. And there's a requirement, there's an overlap with PPP. If you use for PPP, don't use for RF, right? And I want to show you a tracker. And this is the National Restaurant Association and AICPA. They created something really interesting. So I am here to show you to how to use it. But I want you to take a picture of this link right here. Restaurant SACT Restaurants Act.com RF. So take a shot of this link because I'm going to show you the Excel they created, how to use it. I think it's very useful, especially if you are going to do that yourself. This would be a good sideways for you to feel confident that you have it all managed. Okay, so let me end the slide sharing with you, and let's go to my the link I have here. See, I came in this Restaurant Act, this website. This is a website that, you know, since pandemic, I come over here a lot. And this is the Restaurant Association. It's kind of they're really they really good at keep up with what's going on. So you see here is expense tracker. So I actually clicked here on the link. So I came up with this one. So this is the one that I downloaded. So I want to show you. So allow me to look for to make it bigger, if I know how to do, right here. Okay, I think this is good. You see, so AICPA and the National Restaurant Association, you can enter your business name here. Then this is a summary sheet. You see on the bottom is summary, and this is expense trackers right here. So I came over here, I put in the RF fund I received. And so this is automated. So you only need to put in the total you have. For example, you put in 500,000. Okay, so that's your fund. And in here, every time you spend money out of for IRF purposes, and you're just coming over here to fill it in. So, you know, remember this date has to be expenses between February 15, 2020, all the way to March 11, 2023, right? So maybe February 16, 2020, and maybe the vendor is utility. I'm just gonna make up utility Mid-America. This is a utility company locally here. And then I just gonna put in invoice. Maybe I have past due for the last 18 months. So there's many invoice. So I just gonna put all my invoice here. And so a lot of invoices. So expense description. And here I just gonna say utility, utility expense owed since February 2020. Okay, So this is my description. And then now expense category. See, in this tracker, they already gave that to you. So you just look for it. See, business utilities. So I select that, and boy, I owe a lot. So that's like 35,000. Okay. And then not to worry about these little checks because I don't have enough space. So here I put it in, and you see what happened is on the summary side, it would already give me how much fund is left over, what is the total received, and what are the eligible expenses. So it will summarize here for your reporting purposes. Okay. So in this tracker, and you can, if you're just so not wanting to do anything and you're so good at cleaning up what you are doing and know how to track your invoices and stuff, and you just do this. Okay. And I would also scan my invoices in one place. In here I would put the scan number or the file name, so that way I can always find all of these ones. If in case SBA come back and goes, I want to see your utility, are you sure you owe 35,000? Then I can give all the invoices to them. Okay. And on the third tab, and you can see they summarized business payroll cost, business rent, debt service, utility. They have all these definitions for you, so you will never get confused. You will never get confused with what you're paying. So with that, I hope that gives you a little bit relief, knowing that what we're looking for as RRF compliance requirement. Like I said, if you get compliance reviewed on IRF, that is what's supposed to be. And if you didn't get reviewed by SBA within 6 years' time, and then you won lottery, you just saved so much time. I'm not saying that you won lottery because you didn't do it, so you just luckily skip it. That's just not really a good way to live life. So you want to make sure that you got it prepared. The only benefit for you not getting compliance audited is because you save some time. You save some bills too, because your CPA firms, your attorneys, they won't have a reason to bill you because they didn't really need to work for you. So having said all of that, I hope this is a good conclusion for our today's webinar, and reminding you again to subscribe to our channel. And when you subscribe to your channel, there's a belt on the side. Hit the bell too, because that belt will give you a ring when we load a new video. And really, why do you need to watch our video? You just listen to our video and you would get the same idea. Okay, so I hope you are learning a little with this webinar. And if you have any questions, and Catherine, Catherine is the master for organizing the webinar. So you can definitely talk to her, email her, and tell her what you need. Let me go to the last page and give you her information. I apologize, I have no quick way to get there. There you go. Okay, and our website, Catherine's email, our phone number, and I hope you had a great time. And give us a thumbs up on social media and stars, and just encourage us to do better for you. Okay, bye-bye.